Puple Ltd. Assessed tax loss on 31 December 2021 current year is 0. Puple Ltd. suffered operating losses during the previous financial year and had an assessed tax loss of 800,000 Rand on 31 December 2020, our prior year. The company correctly, look at this, utilized 344,000 of the assessed tax loss by recognizing a deferred tax asset of 92,880 relating to the assessed loss. Okay, now if you take this one step back, first we will have to start off with our current tax calculation, and they've indicated to us that there is a tax loss. You will remember our questions. Question number 1, will there be future taxable profits? They don't indicate anything, but they indicate to us that there was taxable temporary differences to the value of 344,000 because they have recognized a deferred tax asset of 92,880. Therefore, if you were to think about your deferred tax calc, this will be included in your temporary differences, and your deferred tax will have your amount of 92,880. Okay, therefore, they may only recognize the amount relating to the taxable temporary differences. Therefore, if we now look at this, 800,000 minus the 344, this is an amount that they did not recognize. A loss for 456,000. Okay. Let's take it one step further. You may assume a taxable temporary difference of 668,000 is correctly calculated for 31 December 2021, which is our current year. Right, now if we look at paragraph 37, remember paragraph 37 indicates to us, if we identify in the prior year that there was unrecognized tax loss, a loss that we did not recognize, and there is sufficient future taxable profits, which we are able to identify because they've recognized 668,000, we may now go back and recognize that deferred tax asset. Okay, now if you look at our solution, please don't get confused. I've only included our deferred tax calculation first. We will look at the rest just now. Now, if you look at our deferred tax calculation, I've included my prior year. They've indicated to us in the scenario that they've only recognized a deferred tax asset to the value of the taxable temporary difference. Therefore, we are able to identify that the taxable temporary difference, the deferred tax liability, if you look at the scenario, guys, this 344,000, and this will be a deferred tax liability of 92,880. We may recognize a deferred tax asset to the value of that taxable temporary difference. Right. Now, in the current year, if you look at our current year, they've indicated in the scenario that we have a taxable temporary difference of 668,000. Therefore, we include this taxable temporary difference of 668,000, which will result in a deferred tax liability of 180,360. Right. Now, identify, guys. Look at this. I've not included unused tax loss. I did not include this. Now, you will see why just now. Right, I want you to please focus with me. In the prior year, we've created a deferred tax asset. Now, that deferred tax asset is still included on the records 92880 on the financial statements, right? Now, in the current year, if you think about our journal entry, we had the 800,000 loss, of which we've only recognized 344, resulting in an amount of 456,000. Therefore, in the current year, if we had to include our unused tax loss, we will include and then take it out. Why? Because we will recognize that amount, but we also now use the amount in our current year. We use the total 800,000 in our current year. We do not recognize the deferred tax asset to be able to utilize in future because we use this in our current year. Okay. Therefore, if you now look at the right side of our screen in terms of our current tax calculation, now please bear with me. In the current year, we are going to use the 800,000. In the prior year, we've recognized the 92880 to be able to use in future. Therefore, we have this line item on our statement of financial position. Now, in our current tax calculation, we use the total here at the bottom, the 800,000. We use our total 800,000 from the prior year. We only created a deferred tax asset to the value of 92880, but we are able to now use the total because we've not used it in the prior year. We've created an account to keep that for us to be able to use. Now, don't get confused. Look at your current tax calculation. Remember, we need to include our movement in our temporary difference. Remember your reconciling items in your current tax. We have our non-taxable, non-deductible, and we have our temporary difference. Only the portion that relates to your profit and loss. And this is from our deferred tax calculation. Therefore, when you look at your movement in your deferred tax calculation for me, please, this gray line, remember I've indicated to you, divide this into OCR, profit and loss, unused tax movement, and then your change in tax rate. Right, when we look at the movement, remember, this will be our current year minus our prior year. Therefore, in terms of the movement relating to our profit and loss, we have in our current year the 668,000. Therefore, 668,000 minus prior 344,000. And this will result in an amount of 324,000, a taxable temporary difference, right? Therefore, if you look at our current tax calculation, 324,000. Right. Then in terms of our unused tax loss movement, if you look at our current year is 0 minus 344,000. Therefore, this will be a positive 344,000. Right. Now, let's take it further and have a look at our income tax expense note. Okay, so guys, don't get confused. Think about your T account. Remember, increase on the debit, decrease on the credit. We are only looking at our deferred tax. Remember, we need to include the movement relating to our temporary difference. And now, look at this. Recognition of unused tax loss not previously recognized. Remember, we are now we are using the total 800,000. But a portion of this we've not yet recognized. If you think about our journal entry on the left side of your screen, the red on the left side, where we will have to debit our deferred tax and credit our deferred tax in our profit and loss. Therefore, if you look at our income tax expense, if we credit our deferred tax and our profit and loss, we decrease. Okay. And then we need to indicate the portion that we have used, which is the total 800,000. Okay, and our movement in our temporary difference, the 90720, and important, look at your reconciliation. In your tax rate reconciliation, you will have that unused tax loss that was not previously recognized. Remember what is included at the top versus what is included at the bottom, and identify, work through each line item. Is it included at the top and at the bottom? Is it included at the top but not yet in the bottom? Therefore, this will be a reconciling item. Please guys, the difference in this note is the fact that you have to include the portion that you have not recognized previously and then the total amount which you have used in this year.